from Rightmove that house prices were down 1.4% and shed more than £5,000 in November. So where are you seeing the strength versus what we're seeing over at your rival?
Well, I think it's a very diverse picture across the UK in terms of the housing market. Look, I think most national house price indices are running at somewhere between +1.5%, we're at the lowest, up to nearly +4%. And look, it's fair to say the market in London and southern England has really lagged behind. On our index, it's only just turned into positive territory after price falls over the course of the last year. But actually, affordability is much better in regional housing markets. And that's where quite a lot of the impetus for growth is coming from. I think the other factor is buyers are changing behaviours again. Now mortgage rates are falling. People are sort of slightly bidding for slightly more expensive property once again.
The regional outperformance is fascinating, Richard, because typically when we talk about the UK, for many years we're talking about the strength of the capital. But to me, that's just not been evident since Brexit. It feels as though it's been sort of knock after knock for the capital. Where is the international investor and what is the hope for London to actually see some improvement in house price values at some time, even in 2025?
You're absolutely right. It's a very long, drawn-out recovery. As you say, London had peak house price growth just before the Brexit referendum. The average value of a flat in nominal terms today in London is about the same as it was in 2016. So there's been a big real price drop. And I think it's all about where's London positioned as a global economy. London's housing market is an extension of that economy. The suburban markets have done pretty well over the pandemic. But again, for international investors, it's really a question of, where's the jobs, where's the kind of innovation in a post-Brexit Britain? And there's obviously a world of uncertainty around there. So look, it's certainly not being reflected in real estate values. Rents have been rising quickly in the capital as the economy has reopened and we've added jobs, but it's not really feeding through into the capital value side of the equation.
But we have to look at this in context, Richard, and I love the survey data. I pore over it like all Britons. I'm obsessed by this as well. I say good, actually. I think it's great, and it's a long time coming that actually London is stagnating. It's not going down particularly. It's stagnating. And it went up aggressively at the expense of pretty much the rest of the country. If you look at the chart and the house price growth chart, you know better than I do, over this entire century. So actually, I think we're just seeing a little bit of redressing here now where the country isn't going to catch up with London. It will never catch up with London, but it's actually narrowing the gap a little bit. Is that accurate?
It is. And look, the outlook for housing in the UK is all about affordability. I think really important changes happened in the era of ultra-low mortgage rates. The Bank of England introduced mortgage affordability testing. You might have been paying a mortgage of 2%, but you had to prove to your bank you could afford 6.5% or 7%. Banks were limited into how much high loan-to-income lending they're allowed to do. And that's effectively capped off buying power. And again, that's particularly hit London, the southeast. Whereas again, if you're a buyer in the Midlands and the north of England and Scotland, none of these affordability rules really sort of limit what you're able to pay. And the market there is more in balance between kind of supply and demand. So again, looking forward to next year, I think, regional housing markets, Scotland and Wales will do better than London, the southeast. Where again, I think house prices need to rise more slowly than incomes, probably for the next couple of years, maybe longer, to reset affordability, to price more people into the market.